how's it going? Welcome to MentFX. So in the last three videos, Hey, how's it going? Hey, how's it going? Welcome back to MentFX. In the last three videos, I gave you a step-by-step system that I would personally use right now to basically start trading, to actually look to get funded, and how I would follow it every given day on a market that has been proven to be very clear. And today I want to do the exact same thing once again to show you what you do as a market delivers, as it subsides delivery, and everything in between. So these three videos are kind of crucial to this one. This one can act on its own if you really wanted to, but I suggest that you kind of see these three in tandem together. You take value from them, you start to see profitability, and then you become part of the best team in the entire industry, which is the link below. But without further ado, let's get into it. So yesterday, this entire video ended off with an overall of around 27 RR being up over the last 3 days, as well as the trades yesterday that amounted to around a -1, so a loss, as well as a break even. That was the entire video last time I uploaded one, which was yesterday. If you're watching this in the future, that was on 7/17. Again, I'm trying to showcase kind of what you do in the day-to-day if you're trading a lower time frame based system. And for today, once again, what I've done is I've went into my trading view, I've pulled it back to the exact moment that we stopped last time, just as it started to lose that overall bias, and we went back into the live market condition. You can see here it's at 557, on the candle, so it's live market. And there was currently, this is where we left off. And at that point, there was really nothing left to do other than wait for setups to become clear again. So I ended the video there and I told you what you would look for in the scenario that we were to continue following the actual market. And today I want to do exactly that. I want to show you what happens if we keep following it and if new situations arise that we can trade. Because in this moment, as I'm recording this, right, going back to the MentFX screener, or as you all know, the sentiment viewer, which all of you have access to, but the screener is of course pulling data, is paid for. We pay for the usage and the users and everything under it. But very simply, gold itself, if you notice, has remained in an overall bullish model and a bullish scenario, right? I'm going to add the lower timeframes too, just for the sake of having them. But for the most part, I'll go like this, right, it has remained extremely bullish. Now, recently, you can see the 5 minute and the 1 minute have entered some kind of redistribution or some kind of bearishness, which is fine. But the overall underlying on this market has been continuing to show bullishness. And in the scenario that you're trading in EVC, where your entry, once again, is a 1 minute chart, then your V as a multiple of 6, and you can see these in the last 3 videos to see this rule again, is a 6 minute, and your context as a multiple of 10 is the 60 minute. So again, these are the 3 timeframes we've been using in the last 3 videos, and we're going to keep doing that to again showcase the exact same things. So at this point, the 60 minute, given that this is failing, and we're picking this up directly from where we left off last time, given that that is now failing down, all we're probably going to wait for, let me hide all this, all we're going to wait for now is for the 60 minute to start moving into, oh right, I have other stuff on here, is the 60 minute to start moving into a bullish context. And what that means is very basically, as it continues to move long, as it continues to go through stage 1s and 2s to the top side, which basically means that markets move through stage 1, 2, stage 1, stage 2. On average, every market that delivers in a clean way, actually any market, but especially markets that are going to deliver clean to the bullish side because a certain software or a certain tool is showing you that, the way they're going to do it is like this, in stage 1s and 2s. And those stage 1s and 2s are going to be defined by many ranges that form, and as they begin to be traded out of, as demand comes in, they get, the big money comes in and starts to push beyond those points. So if you just look at the price action here on gold, on the hourly over the last few months, or the last few weeks in this case, you have simply a stage 1 to stage 2. Now, this is not a guarantee that you'd be trading during these points, but it's a demonstration of the concept. Stage 1 into stage 2, 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 and now, very simply, we can assume a stage 1 is happening, and a stage 2 may occur. We don't know if it's going to come in, but it may occur in the coming hours because we're on an hourly chart here for the context. So very simply, what I would do is I would kind of, you could pinpoint where you are generally. You're kind of, you're trading under this line. Maybe you can prorate it out like this. It doesn't have to be perfect. So really what you were expecting is that the only time you should be stepping down to a 6 minute and starting to follow a actual market condition is where a stage 2 is likely taking place, because then as the 6 minute begins to set up its moves, the 1 minute is going to give you opportunities for entry in this scenario of an EVC. Now again, remember, I do not trade a 1 minute personally. I trade an hourly chart and I apply the same thing: 6 hour, 60 hour, or 1 hour, 1 day, 1 week. Again, you can do a little bit of a mesh, but this is the simple and best rule that you can use at the moment, okay? So at the moment, if we look at this from where we left off in the last video, over the last 3 days, this would be the 4th day of trading this pair. Again, when I actually trade, the actual analysis is a lot faster, right? I look at this, okay, it's bullish. I go over to the market, okay, it's not above this. I set an alert, right? You set your alert, wherever the alert key is. Okay, I guess it's not here. You could just set an alert, because I have a lot of alerts set, and you walk away. That would be my entire thing, but I want to show you, if I'm in a backtest scenario or I'm explaining something to you, what it truly looks like to be a trader, because being a trader is not taking trade after trade after trade, day after day after day. Mentors will tell you, Instagram people, all the people in the world, okay? People that try to teach you or sell something are going to try to tell you that you can trade every single day, because all you have to know is know the market and watch for the break. It's complete nonsense, right? The market does not move in one way like this, right? It's not perfect. It does not move like this in any situation. It doesn't every single day do a version of this where it's perfect and perfect and perfect and moves. It's complete nonsense. And the more you trade in a way where you think a pattern's going to happen every day, the more you're going to fail long term. So instead, understand that trends govern the market, and those trends are created by supply and demand, or an interaction of them. Allow the market to prove a certain direction. In this case, the demand is in control, and allow that demand to retake control so you can continue following it. In this case, through the stage 1s and 2s of context, through the stage 1s and 2s and the surfing application of the validation, and through the stage 1s and 2s and the interaction of supply and demand through structure on the 1 minute. That's the overall EVC system that I want you guys to use, okay? And that's exactly why I've released these 3 videos in a row, just to really give you that, okay? So in this case, I'd be waiting for price to get above here. Otherwise, I'll probably not even check a 6 minute. Now, I'm gonna look at the 6 minute because when you're playing price on a replay mode, if a candle does this, right, there may be a chance that a 6 minute may have made a setup here, right? Because during the time that it's forming, I'm not waiting for a candle to close. I'm waiting for price to prove that demand's coming in. So that's why I'm gonna play it from the 6 minute. But again, at this point, I would not even touch the 6 minute. I would just be waiting for the hourly to start making that push. So we'll wait and see if that push gets made. So again, this would be your entire trading. This is how I would approach it, because what I'm looking for now is for price to not only come out of this, but also to do so impulsively as it did in the last few days of testing that we've done, where we've taken trades inside of all of these beautiful areas here, okay? And so have the members in the team. So again, tiny little move. This is not interesting to me. I'm looking for a true magnitude of demand coming in. I'm looking for true money to be behind this move so then it can support itself higher. And this is beautiful, right? You have a move higher, and now hopefully we again have price maybe create a surfer, start to go higher, build the tight range, and then we can look for a trade. Right now I see absolutely nothing, so I wait, right? Okay, beautiful. So price actually begins to surf kind of higher with this rising 10, with this rising 20, and once again, puts in a little range across the top. That's phenomenal, because now, once again, we've started a magnitude move, we've gone sideways, and we can take a look at the entry-based time frame to see if it's in a situation where it's worth buying or selling, or in this case, buying, or not even worth touching at all. So in this scenario here, right, we have a structural delivery is there. We have price coming down, meeting the anticipation of the higher low rule, which is taught in the mentorship, as you guys know, but I've also shown you it multiple times. This is the anticipation of the higher low rule, where a structure is created by a new leg on the inside, taking out the leg of an inside structure. That's the anticipation, or stopping just above it, right? So this is just the overall rule where basically this is happening. This is the anticipation of the higher low rule, okay? So what I'm gonna look for now, right, is again, a demand on the top side that I can buy stop that's going to create likely a new move higher. And right now, of course, we have this high right here. Perfect, nothing more to do. So I can set up my buy stop, I can set my stop loss accordingly, and I can see if this wants to tap me in. So price plays around, comes down very abruptly. I'll jump back to the 6 minute to keep watching this. And again, what I'm looking for is basically for price to, I'm gonna delete the lines because I don't like the lines meddling with me when I have them drawn and they don't begin to play out. I wanna see price surf these higher and create a tight range, which becomes clear across the top. Right now, in my book, I don't see something that's super clear. I just see, you know, a bit of looseness here. I wanna give it the chance to prove itself. So again, if I miss this trade, that's okay, but what's happening is on this candle, if you notice, right, higher lows start getting formed, higher lows start getting built, just above the rising 20, and across the top, you start creating this tight little range through which, if you have an expansion, so you can almost like imagine it. If there's an expansion, right, that would be a very clear expansion out of there, and that would make a very good trade, because that would be a breakout of this overall range. So that leads me to go to my entry time frame to see what's going on here. Right now, personally, when you get these last second pauses like this, these don't usually work out that well from what I've seen. So what I'd want to see in this scenario here is for price to pause a little bit more and then create that high through which we can trade, right? So I'm gonna give it a second here. Beautiful, beautiful pause, beautiful move back up. So in this case, I'm more than happy to take a buy through here, stop loss under the low, and look to take it long. So we wait, price fails down a bit. We'll give it some time because it's still surfing higher here, and it may create a very nice area to buy in a second. So we'll see what happens. Yeah, so you can see it's still doing it, but now this is happening a little bit under. I would still be more interested in kind of this high right here. So I'll give it a chance to form some kind of high. You know, we don't really get anything. We'll go back to the 6 minutes to check out what's going on. Again, delete the underlying action because again, I want to focus on the current happening market. And right now we're failing under a downwards moving 10, the 20 sloping upwards, but price is failing down and no longer building overall higher lows. So I'd give it a chance to, again, start building higher so we can take a trade. So this is hard. This is a very hard thing to trade and it's getting very loose. So like, you know, there's something here, but I hate forcing trades in areas like this because when there's a lot of choppiness like this and there's not a perfect, a clear area by which a price gets above it, it's going to prove itself or falls below that you're going to get out. This is one of those areas where I assume the next few candles are going to do something like this, or, you know, come up and like this, or come down and like this. And I hate trading markets like that. So I'm used to that. And as a result, I'll just ignore this action, even if it results in a good trade, right? Unless it becomes clearer over the next few candles. So it comes up, I expect it to chop. It's kind of chopping, you know, this, if there was a trade in here, it's probably break even already. But now, if you notice what's happening, right? You have that move, this is sideways, and now all of a sudden, it moves higher and it starts to build higher lows across the bottom here and starts to put in this little range across the top. Now, I would still say it's a little bit too loose. Hopefully in the next 1, 2, or 3 candles, it becomes a little bit clearer and tighter. At that point, we can step down. So, and we can even start to go higher with the 50 here, but at the moment, you know, I see absolutely nothing. I just don't see anything here. This looks like just a choppy market, which is exactly what we would have expected. So now it's coming up. Maybe we missed a trade, but that's okay. You know, there's nothing for me to do here. I have to ignore it. And looks like we did miss that trade. Starts moving higher. This would have been a pretty nice little trade if we did get it. But, you know, that's part of the game. I'm not here to be upset over missed trades. I'm not here to cry over the things that don't work out. I'm just here to trade the stuff that is clear in regards to the stuff that I've tested, right? That's really it. That's all trading has ever been. So prices, again, moving higher with the rising 10 and the rising 20 and kind of building this tight little range across the top. So I'll take a look at the minute, see what's going on there and see if it makes sense to keep following it. Now, at the moment, structurally, we are definitely there. The anticipation of the higher low rule is not being met yet, which is a little bit of a problem. So this basically makes me think that price wants to go sideways for a bit more before setting up. I don't believe that a setup that would happen right now would work out well. So I'm going to wait for that to hopefully occur. Otherwise, again, I'd miss a trade. So this is usually what I want to see. A little bit more sideways, and all of a sudden, you start getting legs that are now meeting the anticipation of the higher low rule. So again, you have a low in place, and now you have a high that can be buy stop. So this is very, very nice. If price can get above here, I'm more than happy to take on risk and take that long, okay? So we'll see if we get tapped in. Still looks good. Comes down. Would cancel this. Just give this time to build up now. Comes up a little bit. So again, all I'm waiting for is for price to hopefully go sideways here and give me a setup. We'll see if we can get that. Beautiful. So it goes sideways, just under this high. We'll buy stop that, throw the stop under, look to take it long. See, we get tapped in. Price plays around, still looks good. Taps us in and actually instantly takes us out for a loss. So we'll take a -1, we'll record that just like this. And then we'll head back to the 6 minute. Okay, and we'll continue to watch for the same thing because if the market's going to be clear, it's going to give you a setup. And you can see we got involved through the anticipation that this was going to start that new stage 2 and move higher, and that's okay. You're gonna take losses. It's part of the game. You guys saw that, you know, the last 3 days or so, this is totally amounted up to 28R. This would put you at 27R for the last 3-4 days. Oh, this would be the 4th day. It's important to understand that because just because you have really good days does not mean that money is there to keep. That money is there to fund the future losses that are also going to be less than the future wins. So over time, you actually will make a lot of money. So even if you took out 14R in profits for yourself, you would still be completely fine as a trader. And that's how trading works as a business, as an actual business, you know, in the real world, let's call it. So yeah, I mean, this keeps building. We'll see if it gets a little bit tighter and then we can look to trade it. Looks like it just falls off, right? So again, simple rules, either giving you an entry or none at all, or one entry and then failing or working. That's the kind of environment as a trader you want to be in, where the things that you're taking either instantly fail and as a result create a non-tradable market condition, or they work and they make you money, as you saw in the last few videos, okay? So price comes down, again, we'd be waiting for some kind of move up. So all I'm looking for now is a big impulse up, right? So I want to see money come into this market very clearly, and then again, those sideways moves, because, well, that's what we know proves that money's behind something. And you can see it just gets choppy, starts coming down. Now it's bearish, so it's probably just going to keep falling off. What I would do at this point, if I was trading live, is I'd head back over to the hourly. Again, I would kind of draw this line that demonstrates where we're kind of under, maybe even right here. And simply, if price starts moving beyond these points to maybe like 24.70, I'll start to watch the 6 minute again. Right now, I'm going to go back to the 6 because in the case that there's a huge candle, I want to be there because I don't want to have to play it back and deal with the potential comments of people that are like, what the fuck? He went backwards and did all this. So again, all I'm waiting for is this is nothing, right? I want proof that money's behind this, clear proof, right? Look at some of the entries we've taken before, right? Entries we've taken before were like in areas like this and this and this, I believe, right? And then before, I think we looked at stuff in here, in here. This is a beautiful move, so probably in here we looked at something. I don't remember probably in here before it failed, but that's okay. Probably in here and here, in here, right? If you notice all these areas, sorry, I'm itching my nose. I got terrible pollen allergies. All of them demonstrate a very clear direction to what price wants to do. And at the moment, right, there's no clarity at that level. Yes, we're in accumulation, but there's no clarity. And this is where, again, as a lower time frame trader, you need to have the patience and the willingness to walk away from a market that's not delivering. Yeah, so again, it just falls down. That's not delivering the way you want it to deliver. Now, again, for those of you that are really seasoned and really good, when you start getting these failures, yes, you can trade some of these lower time frame shorts here. I'm not in the place personally as a trader where I want to do that. I like to see alignment. I like to see something that's bullish, become bullish and be bullish. And then I like to get into those trades because it's the easiest alignment for myself. So I'm just gonna let you guys know that, okay? So then I'd wait because, oh, okay, and we're at live price. So again, this is a beautiful demonstration. Go back to the 6 minute here. This is a beautiful demonstration of how in the event that a market becomes unclear or is no longer delivering in that given beautiful market condition that actually could make you a lot of money as a trader, you don't have to be a loser, right? This is phenomenal. If you can get out of a market that is overall going to be shit and then remain shit for a long time, if that's what's going to happen here, because this is a live price again, and you can do it with one loss, and then when you actually win and you get it right, you take wins of around 5R, 4R, 6R, 10R, 20R, whatever it might be, then you're going to make money over the long run, no matter what. So funny enough, this video is going to be a little bit funny because you're going to be here like, I'm going to learn the most profitable system. And the entire video is me taking a -1. Because the overall thing I want you to take from this is not the fact that I made money or lost money. Well, overall now we're at plus 27 RR. Oh no, 4 days to make 27 RR is absolutely terrible, right? It's not, by the way. If you're new to the space, this is an absolutely phenomenal return, really good return. And if you're trading under $100,000, I'm sure this kind of return on your money at even 1% or 0.5% risk is absolutely amazing. And if you're with Mint Funding or something, right, you guys are doing great. But the thing I want you to take from this is not that we lost a trade in one thing. It's the fact that actually trading is mostly about staying out, because most markets are not to be traded, weirdly enough, right? Most markets are not there to actually be traded. They're just there, right? This is not a tradable market. If you want to force things, you can. A lot of people in the world force things, and a lot of people in the world, as a lot of you know, lose money. Don't be that person. Learn from the fact that there are conditions that create good markets. Those conditions will then give you opportunities, and those opportunities will play out in beautiful ways. And other times, if the opportunities aren't there, things are going to fail. Things are going to not work out. You're going to take normal losses, probably really quick ones, and then you're going to walk away from that market, and you're going to understand firsthand how I can be bullish on something, or how you can be bullish on something and still not trade it. Because once the market starts failing, it's very simple, right? At this point, I don't know what it's going to do. Maybe it'll come up, maybe it won't, but it doesn't matter. Because the reality now is overall the market's been proven to be bullish, so that means I'm waiting for bullishness, which means that if this market does anything like this, it won't matter. Right? But the only people that get affected by something like this, or like this, right, are people that don't understand that there's context to the entries they're taking. So when you're applying patterns and trading every single pattern in every single market, you're going to make a lot of money in context like this. You're going to lose a lot of money after and more in contexts like this. A good example is something like US 100 recently. Okay, if I go to the daily, and now I can just get rid of all this because I don't need these. If I go to the daily here, so this is from a video I made a while back. If I go to the daily here, a lot of traders, as a lot of you know, have made a lot of money over the last year basically on NASDAQ. A lot of people are now trading futures. A lot of people are very happy with futures on NQ, on US 100. But the reason a lot of people are doing well is not because NQ or futures are some special market. It's because the context of this market since around March of 2023 has been exceptional. The context has been really, really good. And really, with any system, as long as you're somewhat following the trend, even if you don't know you're doing that, you're going to make money on this. The problem, as it always has been, is that when NASDAQ inevitably goes into a context like this one, right? Or goes into a context like this one. Actually, let's go like this, DJI. This is more long-term, right? So yeah, goes into a context like this one. When NASDAQ inevitably goes into a context like this one, when NASDAQ inevitably goes into a context for maybe even 10 years, right? So this was from 2014 to 2016. It's not that long, right? This right here, when it goes into inevitably a context like this one, where again, for about 2.5 years, 3 years, it was just going down or whatever. When inevitably, yeah, and you can see it just happens over and over again. And like here, right? This was from 1999 till 2003, so 4 years. When inevitably, these markets go into the normal context differences, the same people that made money with their patterns on those markets are now going to be losing money. And the best thing you can do in moments like these is start to understand what it means to trade a contextually good market. Because when that time comes, when the market you're trading no longer has a good context that you might have been making money on now, and you don't understand that, you're just simply going to lose money. And you don't want that to be you. So instead, show up every day, follow your rules, follow them within the EVC or whatever your actual rule set is, and follow them until the market's no longer there, and walk the fuck away. And that is how you will overall save money in the long run and make a ton of money over time, over a number of pairs on any time frames that you personally choose to trade. Beautiful.